Hello, Matthew Bell with insuranceprescription.com, and today I want to talk a little bit about the W-9. The question that prompted this video essentially was the question of why a person has to fill out a W-9 as part of a death claim procedure when they are filing a claim for a life insurance proceed payout. So when somebody dies, they're insured with a particular company. There's going to be a claim form packet generally that's going to include statements about how the person died, who is the insured. It's going to include information about their Social Security. It's going to include information about their cause of death, their marital status. It's going to collect information about the beneficiaries, how they want the payment processed and paid out, and that kind of thing. And among those papers is generally going to be a W-9, and this is an IRS form. I'll put it up on the screen. This is an IRS form that is titled Request for Taxpayer Identification Number and Certification. And you can see on the screen here that it asks for name. If we're talking about an individual, it can get a little bit more complicated if we're going to talk about, because you can see in box number 3 that it could be a C Corp, an LLC, an S Corp, a partnership, a trust, and so on. So we're going to skip over those and just think about individuals. So an individual filing this form out, why is this necessary? You can see what is required, the name, check individual, you put the address, then you put in the taxpayer identification number. So in the case of an individual, that's going to be the Social Security number. Then they sign it and date it. Why is that form necessary? Why do we have to have a W-9? Well, so you can see from the title that the title of the form is Request for Taxpayer Identification Number. And that's basically exactly what it is. You have to realize that in this country, the Internal Revenue Service is very scrutinous, if you haven't already realized that. And they are interested in following transactions, and even if those transactions don't have tax implications in some cases, the IRS is interested in tracking those transactions. Now, it's beyond the scope here for me to defend that or criticize it or comment on it, but that is basically the reality. So when are these requests typically made? Well, the requests are typically made when a company, an individual, an entity is going to be making some kind of a payment to somebody else. And in particular, what the IRS is looking for is something that's going to be treated as income. So for example, paradigmatic case of this would be where you have an independent contractor. And as a sidebar, an independent contractor is a person who offers services to a company but who is a non-employee. So they are not being paid wages, they're being paid as an independent contractor. And generally speaking, when they're paid, the contracting institution or entity will provide a 1099 miscellaneous, which is going to show how much money was paid for that service that was provided by the contractor. But before that 1099 can be issued, after, of course, the payment has been rendered, the company is going to have a copy of the Social Security number or the tax identification number for the contractor on file. And that will be accomplished with a form W-9. So the W-9, let's say company A is contracting John. Company A is going to request through the W-9 John's Social Security number essentially, so that when they pay him, they can also send that information to the Internal Revenue Service, and the IRS can track how much money John was paid. Then at the end of the year, tax year, Company A is going to issue a 1099 miscellaneous to John, and that will summarize the amount of money that John was paid over the course of the year, and then the IRS will keep track of that amount and file it under all of the things that have to do with John relative to his Social Security number. So his Social Security number is going to be essentially the index, the number that's used to index his particular account, if you like to say it that way, with the IRS. It's a bookkeeping thing. In other words, the IRS wants to keep track of all this movement of money. Now that, again, the typical instance is going to be for income. And there are all different kinds of 1099s. By the way, if John were an employee, then he would have a W-2. So the W-2 would be the form that would be used to report wages to a wage-earning employee, and the 1099 is generally used for independent contractors. Now, there can be other possibilities. There are more complicated situations. This is not a video about tax. I am not an accountant. I am not a tax preparer. I cannot give you tax advice. Nothing herein should be construed as financial or tax advice. This is for general, informational, or entertainment purposes only. But in general, when John receives his payment from Company A, he's going to get a 1099 reflecting all the money he got in that year, and he's going to take that to his tax preparer. Now, again, that's the standard situation with income. And there are other kinds of 1099s. There are 1099 INT forms that are going to report interest and earnings from various accounts like certificates of deposit, CDs. There are going to be 1099Rs, which are going to reflect retirement income payments from things like an IRA or a Roth IRA. And then there's 1099S, which is going to reflect the proceeds and the profit from the sale of some sort of real estate. But again, this is not a video specifically about those. Suffice it to say that the W-9 is used when an institution is going to pay something to you. Now, why then is the W-9 used when a life insurance proceed is claimed? The reason is because there is a payout, that somebody is going to get a check. Sometimes it's a particularly large check, and the IRS wants to keep track of that information. Now, generally speaking, the proceeds from a life insurance policy are tax-free to the beneficiary. Generally speaking, that's the case. There are some business applications where this gets a bit wonky. The fact that the death proceed is tax-free to the beneficiary is in part a function of the fact that you do not, as an individual, get a tax deduction for the amount of money you pay into a policy as a premium. That's part of the calculation. It's not the entire thing, but it's part of it. So in certain business insurance applications, especially if there's some sort of a tax deductible expense associated with paying the premiums, then the thing about having a tax-free death benefit may be thrown into kilter, or at least a question mark will be hung behind it. But for the most part, death proceeds are going to be tax-free. There may be other cases where somebody lives past the maturity of the contract and some of the proceeds are held on deposit. But again, that is a very specific situation that I'm not going to get into detail on here. Suffice it to say that for the most part, death proceeds from a life insurance policy go to the beneficiary tax-free. But the IRS is interested in keeping track of the movement of money. Part of the reason for this, and it has gotten worse, or the scrutiny has gotten more heightened over the years after 9/11 in particular, because the IRS and other agencies are alarmed at the fact that life insurance can be used as a money laundering vehicle. Now, I may get into this in greater detail in another vehicle, but essentially money laundering is an attempt to hide the source of funds. So for example, in the case of a crime boss, let's say, who's making money via illegal gambling, then that crime boss can't just file an income tax return with illegal gambling listed as his occupation, but at the same time he or she wants to spend that money presumably and use it for other things. So in order to hide the source of those funds, in order to hide and obscure the fact that those funds were obtained illegally, the crime boss may attempt to launder them, and that is to say, simply obscure the origin of those funds, to move them from proceeds of an illegal gambling operation and then be able to spend them into the economy as if they had been gained from a regular wage earning or contracted job. Now, all of that is to say that this is the surface explanation for the most part as to why the Internal Revenue Service wants to have the W-9 on file. The IRS is interested, number one, in tracking the movement of money, and when an insurance company pays money to the recipient, to the beneficiary of a life insurance policy, there is movement of money. And secondly, the IRS is also interested, as are other agencies and organizations in the U.S., at trying to identify and counteract money laundering, and life insurance, in particular cash value life insurance, can also be used in that regard. So the IRS's two purposes are simply to keep tabs on movement of money, and in the second place to try to curtail, track, identify instances of money laundering. Now that's not going to apply to most people. Obviously, most people that are going to apply for a death claim or are going to make a death claim on the passing of one of their relatives are simply law-abiding citizens who are simply trying to get the money from the life insurance policy that they've paid into And in those cases, the W-9 is merely perfunctory. It's just something you do. You send the form in, you get the check from the insurance company, and everything has been complete. I hope that sheds a little bit of light on the question of why the recipient of a death proceed from a life insurance policy has to fill out a Form W-9 with the IRS. If you found something of value in this video, please like it, subscribe to the channel. I have additional content coming. I have additional content already up. For further information and reading, you can see insuranceprescription.com, my website, associated with this project. I am in the process of building some of the content up on there, and I invite you to check back. Thank you so much for joining me today.